Hello investors, my name is Ujjwal and we are back again with the detailed analysis of another technology company as part of our series Flexicap Multibagger Ideas. Here we will be doing detailed research on 3 to 4 companies in a month, and the intention is to understand how these companies make money and to judge whether their business model is superior or not. If you are already an investor or looking to invest, then this video will help you build conviction to hold these stocks for the long term. We will also discuss certain KPIs that will help you decide when to exit the stock going forward. Before we get started, do subscribe our channel to stay updated on such high potential multi-bagger ideas from our side. So let's get started with today's idea. The technology company that we will be discussing today operates in the fast growing CPaaS market and is currently witnessing huge industry tailwinds. But its historical journey has not been an easy one. Its own business model has changed significantly since its inception, in line with how the industry has evolved over the last 10 years, both in India and globally. Even before I get into evaluating the business model, I want to talk about 2 important points here. The first point is about the importance of investing in the right industry. Look at the IT industry, for example. Over the last 2 to 3 decades, many companies, either they are small or big, either they are good or average, have done well and continue to do well and have generated huge returns for their shareholders. Contrast this with a company like Castrol India, for example, that is a very good brand but operates in a segment that is slowing as we go into the future. So I would prefer to invest in an average business in a growing industry versus a good business in a slowing industry. Second point I want to talk about is to invest in companies that have gone through a couple of business down cycles. Now this gives me confidence that the management is committed and the business model itself has matured through rough patches to become more stable and robust. So the business has to be at least 15 to 20 years for me as an investor to invest in the company. We will discuss both of these points in subsequent sections and try to understand why these are very important when you are selecting a company to invest. The idea is to build thought processes that will help us select good stocks and give us the conviction to stay invested in them for the long term. With that, let me now name the company for today. It is Tanla Platforms. Let us look at the industry first. And this is a very important part of the whole investment thesis. The CPaaS business, pronounced as Communications Platform as a Service, it's a solution that enables brands and advertisers to communicate to their clients via multiple outbound online and mobile channels through a single central platform. Brands and enterprises want real-time communication with their customers via mediums like messaging, voice, video, etc. That has led to the emergence of platforms that have enabled the management of all of these communication tools at single place. There are a number of services that can be considered as part of the CPaaS platforms, including messaging technologies like SMS, RCS, which stands for Rich Communication Services, OTT messaging platforms like WhatsApp, Viber, and Facebook Messenger, etc. Also offered are push notifications, voice messages, emails, and now video is also getting added to the whole set of technologies that enterprises are using to communicate with their customers. CPaaS companies, Communication Platform as a Service companies, develop the technology layer and partner with various telecom operators, OTT companies like WhatsApp, Facebook Messenger, to provide various channels to enterprises so that they can access their customers across various different geographies as well. For example, let's say if Facebook wants to communicate, that is send an OTP to a customer in Africa, the CPaaS provider has to partner with telecom operators in Africa to enable that. Now Facebook can either send an SMS or it can do a voice call also. So the CPaaS provider has to be able to provide both of these channels to Facebook in order to communicate with the end customer. So there are 2 key elements that make the CPaaS platform stronger, and these are modes, so to say. The first is the telecom network or the geographical reach of the CPaaS provider. The second is the technology capability, that is the ability of the CPaaS provider to deliver traffic across various different channels. As we go into the future, two-way communication through chatbots is going to become very popular, and the ability to provide managed services to create complex user experiences will be the key. Such experiences will be built on artificial intelligence and machine learning capabilities. Juniper Research, which is a market research company that operates in this space, believes that the keys to success of CPaaS platforms should not be measured by the volume of traffic, but by the number of communication platforms that it can offer. For example, can it offer voice, email, SMS, OTT at a single place across various geographies? And to what extent can it provide managed services on top of this? So ability to customize the offerings based on customer to customer is very important for a CPaaS provider, and that is where managed services comes into play. Now that we have some understanding of the CPaaS space, let us look at how big the industry is and how fast is it growing and what are some of the trends in the industry. The size of the global CPaaS market is about 8.7 billion USD, which is close to about 65,000 crores as per Indian INR. And this is the FY21 figure. And this is expected to grow at about 26% annual growth rate to reach about 27.4 billion by FY26. That's a huge growth. In India also, the CPaaS market is somewhere close to about 850 million USD. That is 6,500 crores or so, which means that the Indian market is about 10% of the global market size. The Indian CPaaS market is expected to see volume growth of 20% plus annually due to increase in the volume of messages being sent. And then there are price hikes every 2 to 3 years, which takes the growth rate even higher. If we look at the structure of the industry, there are about 7 to 8 large players that hold 80 to 85% of the market, followed by a long tail of providers that serve a long tail of smaller businesses as well. Carix, owned by Tanla, ACL Mobile, Gupshup, Value First, etc. are some of the Indian players in the industry, while Twilio, Cinch, Ring Central, Vonage, Five9, Bandwidth are some of the global players in the CPaaS space. So the industry itself is expected to grow at 20% plus CAGR on the back of just volume growth, which is the number of messages and voicemails being sent through the CPaaS platform. We are not even talking about the increase in the pricing, which will definitely happen every 2 to 3 years or so. But just because of volume, there is going to be 20% plus growth rate. There are very few industries where the entire industry is growing at 20% plus CAGR. So this is a very unique situation. So we as investors should take advantage of such situations where the industry itself is growing at 20% CAGR. Let us now try to understand why the industry is growing so fast. You would understand some of these reasons very well. For example, digitization of the economy itself. So more and more smartphones are resulting in more and more app installs, leading to higher push notifications and verification messages. This is a very important reason why so many SMSs and OTPs are being sent to your phones. The second is the penetration of mobile banking and e-commerce. You would also have noticed that you are now doing more and more mobile transactions and not visiting the branches as much. And you're also buying a lot of stuff online, which is essentially leading to the increase in number of OTPs that you're getting on your phone. The third is the rise in online business models. We have new fintech models, for example, businesses like Paytm and all the online digital platforms that we have, where on every transaction you get either one message or multiple messages. In fact, as per the RBI regulation, RBI has mandated that every transaction should be followed by SMS alerts, OTPs, two-factor authentication should happen, and each RTGS, for example, requires 3 messages at least. As an investor, if you want to invest in companies that are benefiting from this online/digital revolution theme, then this is one industry that will be a direct beneficiary, and hence it is a good proxy to write the multi-year digital theme that is going to play out not just in India but globally. The other industry trend that is happening is that going forward, rich media messaging formats will become increasingly significant in generating CPaaS vendor revenues. Let us understand this better. Among the various A2P, which is application to person, wherein the message is being conveyed from an application like a mobile application or a business or an enterprise to a person. Among the various A2P channels, SMS has been the main channel for sending messages because of its reach, low cost and security. and will continue to grow as we discussed earlier. But its market share will decrease in the coming years due to the rise of OTT and RCS messaging communication services. So SMS accounted for 88% of the enterprise A2P spend and 83% of the A2P volume spend in 2019. But these figures will fall to 75% and 60% respectively by 2024. You would have seen that companies like MakeMyTrip or even banks have now started using WhatsApp to help customers with their queries by enabling two-way communication. A lot of traffic of customer call centers is now being directed to OTT channels like WhatsApp because of this use case. Current challenge with OTT tools like WhatsApp is that there are many people in India who still don't own smartphones. And also that OTT pricing is significantly more expensive than SMS. For example, WhatsApp messaging is 2.5 times more expensive than a simple SMS. Both of these challenges can reduce going forward. There is an expectation that about 20% of the CPaaS revenues will come from OTT and RCS messaging tools, rising from less than 2% in FY21. So we are hoping to see a lot of new incremental volume move from SMS channel to the OTT and the RCS channel. This will affect telecom operators negatively because of the traffic moving away from SMS to OTT. But for CPaaS providers, this is a good development because OTT margins are generally higher than what you would make in an SMS. And there is potential for providing a lot of managed services. So CPaaS providers will see their margins improving as more and more messages or the volume of traffic start shifting from SMS to OTT players going forward. So to conclude, the industry is looking very, very attractive. And as an Indian investor, there are two listed options available to us to invest in this space. One is Route Mobile and the other is Tanla Platforms. Here, we will be analyzing Tanla Platforms, and wherever required, we will also do a comparison with Route Mobile as well. Now let us try to analyze the company in detail. Tanla was founded by Uday Reddy in 1999, and its business model has seen significant changes over the years in line with how the telecom industry has changed over the years in India and globally. To give you some sense of how it has changed, 10 years ago, Tanla derived 99% of its revenues from outside India, and today 77% of the revenue are generated within India. This is why it is important as investors to see how the company adapts to changing industry dynamics and matures its business model. Before acquiring Karix in 2018, Tanla was basically buying SMS capacity from telecom companies in bulk and selling it to the top CPaaS vendors. From 2015 to 2019, Tanla benefited hugely from the growth in SMS volume led by banking and e-commerce sector. In 2018, Tanla announced the acquisition of Karix, the market leader in India in CPaaS space, from Blackstone. This was basically a forward integration because of which Tanla became an end-to-end player, buying SMS capacity from telcos and selling directly to 2000 plus enterprises. With this acquisition, Tanla diversified its customer base from 7 to 8 CPaaS players to more than 2000 plus enterprises. It got access to impressive set of clients where Karix had long-standing relationships. Tanla acquired Gamuga, a marketing automation company, in October 2019, which led to the enhancing of Tanla's product portfolio with artificial intelligence and machine learning capabilities. What these acquisitions did is that it changed the business profile of Tanla from a company that was dealing in commoditized SMS business to an end-to-end CPaaS technology platform with new age AI and machine learning capabilities. The biggest proof of this change was the launch of TrueBlock in September 2020, that is based on distributed ledger based blockchain technology. This platform is used to filter unsolicited SMSs, and as of today it handles 63% of the overall traffic and is also the single biggest blockchain use case globally. This product was soon followed by the launch of another product called Wisely platform in partnership with Microsoft. Wisely is again a blockchain-based CPaaS solution that offers global edge-to-edge network that delivers private, secure and trusted communication experiences. Now, although this has all the buzzwords, even I don't fully understand the technology behind it. And I think as investors, this should not limit our ability to invest in such companies. All I'm trying to say is that the business design is not really as commoditized as one may think. Generally, commodity business have very difficulty passing on increased cost and that affects their margins. But Tanla has been able to pass on increased cost and maintain its margins. For example, very recently telecom companies increased their ILD pricing and the same was passed on to Tanla as a cost. Tanla in turn was able to pass on the price increase to its end customers, thus maintaining its margins. Having discussed how Tanla has evolved over the years, let us now look at its two revenue streams. Tanla has two broad revenue streams. First is the revenue derived from enterprises for providing business communication solutions. Second is the platform revenue from telecom companies in the form of revenue share as a result of Tanla's platforms like SMSC and TrueBlock. Let us first evaluate the enterprise communication business where Carix is driving aggressive growth. Tanla is the enterprise segment market leader with more than 30% market share and trusted by more than 1300 customers across various industries. In this line of business, there are two very important key performance indicators. The first is retaining acquired customers and adding new ones. So, the company has to be able to retain existing customers while adding new ones. The second is growing revenue per client, that is more and more mining of each client. Every customer should contribute higher revenues year on year on the back of rising use cases and growth in volume. Here, the pricing is very simple. Tanla bills enterprises at 13 paise per SMS, of which it keeps 3 paise. So the gross margin is somewhere around 22 to 23%. Now, if we look at the historical data, we can see that Tanla is doing well on both of these parameters. The company added 237 new customers during the 9 months of FY22 versus 206 customers in the 9 months of FY21. Also, there are now more than 189 customers contributing more than 1 CR in revenue versus 159 from last year, and 18 customers with revenue greater than 50 CR, up from 11 in third quarter of last year. All of this is leading to lesser client concentration. Top 20 customer revenue concentration as a percentage of revenue has reduced from 63% in Q3 of last year to 60% this year. Going forward, the enterprise communication channel can grow anywhere from 20% to 25% because of rise in messaging volume from new and existing customers, and also from the increase in use cases like OTTs and voice. And this revenue growth is expected to come at 20% plus gross margin. Second is the platform revenue from telecom companies in the form of a revenue share as a result of Tanla's platforms like SMSC and TrueBlock. SMSC is Short Messaging Service Center, that is essentially a software that resides in the telecom operator's network and is responsible for routing messages to end users. And this generates revenue in partnership with the telecom companies. TrueBlock is the biggest blockchain use case globally. Telecom operators are using this technology to scrub SMS messages and remove unsolicited commercial communications. Today, it handles 63% of the SMS traffic and is deployed with all the major telecom companies like Vodafone Idea, BSNL, Airtel, as well as two telecom companies in UAE called Etisalat and DU. Both of these products contribute to platform revenue, and this comes at very high gross margin, upward of 90%. Here, the revenue model is a certain share per SMS, and there is no incremental cost except for cloud charges, which varies anywhere from 5 to 7% depending upon the platform, and hence the higher gross margin related to this product revenue. The revenue growth is directly linked to the increase in number of interactions through the platform, which is growing at about 33% year on year. With the platform business growing faster than the enterprise business, we can hope to see the gross margins inch upwards from here on. Having looked at the revenue streams and their margin profiles, let us now evaluate the overall historical financials of Tanla and see some of the key financial metrics. We will be analyzing the financial performance of Tanla after the Carix acquisition in 2019. As you can see, the company has increased its revenue from 1000 odd crores in FY19 to to now crossing 3,000 plus crores. During the same time period, margins have increased from 10% to 22%. As discussed, we are hoping to see this increase further because of increased contribution from platform business, which is coming in at about 70% plus operating margin. And note that the company is a zero debt company. The other good thing about the business is that it is highly cash flow generating because of the low working capital requirement. As you can see, the company generated 560 odd crores of cash flow from operations with an operating profit of about 435 crores. So there is a lot of cash with the company that will be used for international expansion and tuck-in acquisitions. Beyond that, the company is also paying dividends, and recently it did a small buyback as well. I also want to draw your attention to the increase in shareholding of the promoters that has increased from 35% in March 2019 to 44% in December 2021. It is generally encouraging to see that the promoter increased their stake, which means the promoter group is gung-ho about future growth potential of the business. Now it's time to do some peer-to-peer comparison and also understand whether the company is undervalued or overvalued in that context. As you can see here, between Tanla Platforms and Route Mobile, both the companies seem to be doing well in terms of growth. However, Tanla has higher margins and return ratios versus Route Mobile. Now both the companies are good, but from a valuation point of view, there is huge gap. Route is trading at a price to earnings ratio of 60, while Tanla is at a price to earnings of about 40. Globally, CPaaS players like Twilio, Cinch, Vonage trade at very high valuations, anywhere from 45x to 80x. Now there were some concerns regarding corporate governance issues and data transparency issues at Tanla, which I believe are no more applicable. The company has made serious efforts to revamp the board and management. There are 4 independent directors on the board heading important committees. Sanjay Kapoor is also on the board, who is the ex-Airtel CEO, as a non-executive director. So that gives me some confidence about the board of the company. Also, the company brought in new CXOs, including CTO, CMO, CHRO, and very recently a new CFO as well. So entire CXO committee has gone through a change, and they come from reputed backgrounds. So I believe these steps are assuring to retail investors. Also, if you look at the annual report and read the con calls, I get this sense that the company is making serious efforts to come clean and become more investor friendly. So I certainly think that the price to earnings gap will definitely reduce going forward. Now, what are some of the positive surprises that we can see going forward? Being the largest CPaaS player in India, there is now an option for Tanla to grow internationally in higher profit margin geographies, led by launch of the Wisely product. As we speak, the product is being tested with Vodafone Idea, and the company has also appointed a reputed management consulting firm to help with the international go-to-market strategy. So we could see long-term growth opportunity here from the international expansion starting next financial year. The second is that the company has been talking about small tuck-in acquisitions to add technological capabilities or expand into newer geographies. Given the successful track record of acquiring Carix and Gamuga, we might see a positive surprise here as well. The third point is regarding the high margin platform business, which is helping the overall margin profile improve going forward. Now here we could see scaling up of this platform business by the addition of scrubbing of various voice calls and even OTT messages as well. Those are currently not in the purview of the TrueBlock product. If those get added to the TrueBlock product, then we might see a sudden increase in volumes coming from voice as well as OTT volume traffic. Our analysis won't be complete without mentioning the risks at hand. There could be a situation where Tanla could lose market share in India due to high competition from Indian players as well as international players coming to India. For example, Twilio acquired ValueFirst to expand its presence in India. This can lead to both reduction in market share as well as reduction in margins going forward for the enterprise business. The second risk is that telecom operators could squeeze margins or pass on lower revenue share to Tanla due to their higher negotiating power. There is also a possibility of telecom companies launching their own CPaaS solutions. For example, Bharti Airtel launched Airtel IQ, which directly competes with the solutions offered by CPaaS vendors.